Are you looking to purchase a home and interest rates got you down? Well, with the rising interest rates that are happening right now, some people are deciding whether or not they want to hold back for the time being. And I'm going to give you a great tip of how you can lower your interest rate and be able to still get into that home with no extra money out of pocket. I'm going to tell you why in just a second. Let's take a look. So let's take a look and say you're buying a $650,000 house. Now this can be any different price range, it's fine. This is just an example here. Say you're putting 5% down for a conventional loan. And so your loan amount is going to be $617,500. Your interest rate is, let's just say, 5.499%. Everyone's interest rate is going to be different, just FYI, but for this example, we'll just go with it. You have your APR over there, 5.825, and then you got your terms and payment of $4,529, so $4,529 a month off that. You have all the rest of the information over there, and you can kind of get an idea of what to expect. Now, let's take a look at a first option that you can do. First option, you might be thinking, let's just ask for a lower price, right? That's going to lower our payment, let us afford a little bit more. That could be great. Well, the market's still a little bit competitive at this time, and while the market has shifted some, you might struggle to get that. But let's see what would happen if you asked for, let's just say $20,000 off the list price. So we're going to offer $630,000, which puts your loan amount at $598,500. Your interest rate's still the same at 5.499%, and APR is the same as well. And you can see your payment does drop some. Actually, you're saving $135 a month. That's great. You can see everything else here, all the numbers, and your savings after 5 years is going to be just under $5,500. Now, here's the option that I think may work best, especially if maybe it's still a little bit competitive. You don't want to insult them. Maybe you can't get it down $20,000. Here's a way that's only going to be $6,000 out of pocket for the seller. So what we're going to do is we're going to go in with a full asking price offer. Now this can vary. This is just for an example, but say it's listed at $650,000, come in at $650,000. Same loan amount, but your interest rate is 5.125%. And with that, your APR is lower, and your payment's going to be $4,385. It's a savings of $144, which is actually more monthly savings versus the reducing the price $20,000. So we're asking, what's happening here is a $6,000 credit from the seller to pay for points to buy down your rate. So you may have heard points, buying down rate before, anything like that costs points. With that, what that means is you're essentially just being able to pay for a lower rate. Now there's some caveats on it, I'll get to that in a second, of why you should or shouldn't do that. But with that, you can request the seller to buy on those rates. You can pay for it yourself as well. It's $6,000 in this example, or you can ask for the seller to take care of that cost for you. Now, at the very end, which I thought was really fascinating, in 5 years, that 60-month savings there at the very bottom, instead of under $5,500, you have almost $12,000 savings in 5 years. Now, who is this right for, and should you not do it? Well, this is going to be most ideal if you intend to live in the house for an extended amount of time. I'm talking at least 5 years, preferably even 7 years is what a lot of people say as well, or even more. So with that said, make sure you intend to live in the property. If you're thinking maybe just a couple of years, may not be the best, as those savings aren't going to quantify over a short amount of time. Now, if also you're thinking you're going to have to refinance, do a cash out, anything like that in the future, this may not be the option for you. And thirdly, if you think interest rates alone are going to go up, this may not be the right plan for you. I will say, and if you watch my videos, you'll know that forecasters are predicting interest rates are going to continue to trend upward. So even if you, right now, I'm talking to my clients personally about this option. And if you are working with me, thank you. and looking to do this. So it could be a good potential option to save you money off the monthly fee, maybe be able to qualify for a little bit more. And while the market's still competitive, you're going to be able to more likely get in and get that home you want at that lower payment and interest rate. I have talked to some lenders that can still get rates as of today, filming around in the fours still. High fours, but still in the fours. So there are definitely some options out there. If you have any questions on this, please comment below, or my cell phone number, email, and everything is below as well. Call me, text me. I'm in the Reno, Sparks, Northern Nevada area. I am here to help you with your real estate purchase. And who knows, maybe you have one to sell as well. Hit that subscribe button so you don't miss any of these other great videos. Watch my other videos over here, and I'll see you next time. Thank you.